What's going on YouTube? Chris here. Want to bring you all an update of something I was doing some research on. What I've been doing is going through Bitcoin corrections in bull markets and how harsh they can be and some of the characteristics, what they can look like. And I was going through and I found this article. It's by bravenewcoin.com. So go ahead and check that out if you want to see more into this article. But I wanted to focus on number 5 here. And what it says is corrections tend to be negative 30 to 40% deep. And then what we're going to do is get into my charts. And I'm going to show you how deep of a correction we are at right now for Bitcoin. So hopefully you guys get some from this. If you do, don't forget to like, subscribe, hit that notification bell, and we're going to dig into this. So what this says is corrections tend to be negative 30 to 40% deep. In the 2017 bull market, Bitcoin experienced 5 major pullbacks. These pullbacks range between negative 29 to negative 40%. The average bull market correction was about negative 35%. That said, no matter how deep these retraces were, each of them preceded new all-time highs for the Bitcoin price. And also I wanted to mention here, guys, I didn't see the person's name who wrote this. So this is by bravenewcoin.com. Check that out. And then we're going to get into the charts here. So when we're looking at that and we're looking at an average of about 35% to the downside on corrections, I want to take a look at this one here that we've had. And that was about 25%. And now if we take a look at the correction we've currently been in, we wicked all the way down to about 39%. So right now, guys, we're basically, it's the line in the sand. We need to hold the area that we're at because it's also correlating with this 200 moving average that I don't want to drop below, because typically when you drop below that, it'll act as overhead resistance and you'll spend time below that. So you can see over here, back in May, when we lost it, we spent a significant amount of time below it. It was actually 25% we went down once we lost this 200-day moving average, and we spent a lot of time below it. And we back tested it one time, and that was it. So I don't want to spend another 2 months, a month and a half, whatever it was, and 25% more to the downside if we do start dropping down through this and we're not able to hold it as support. That would show weakness, and then we'd have to get up through it with we would have to get up through it and it would be turned as resistance. So we just want to hold it as support right now. So this is definitely an area being down almost 40% off the 200 moving average. I want to see us hold that. So that's one thing that I'm going to be looking at, especially for the daily close today. Next thing I want to show you, so far, I mean, this could still just be a really nasty, gnarly correction in a bull market. Here was our low, higher low. This wick would still be a higher low, so we have to hold that, and that's why that 42,000 is so important. Okay, now as overhead resistance, this is our major area here, is going to be about 53,000. I thought we were going to find support off this and move higher, guys. That was my assumption, and the fact that we did not hold that as support and now it's acting as strong resistance, we have to have volume to get up through that. So keep an eye on that. We're getting squeezed between this range, and it's going to be decision time soon enough. Right now, the relative strength is at 34. If we take a look at our cipher, money flow, we have entered the red just very lightly into the red here. VWAP is at negative 1.77 right now. So we did have our green cipher dots that came in. Typically, these do a pretty good job. You don't see them too often. And when they do come in, like back in here, we got a really nice move. Back over here, this was a tough one when we first got this. Here we bounced up, and that was our back test, and then we kind of lost it after that. So they're not guaranteed, but when you do step back and take a look on the 1 day, you can see this one here. This has been pretty significant. So when they're a little bit deeper and you get those big green dots, many times that can mark the bottom, and we've had 3 down in this range with a lower RSI. So, if the bulls are going to step in, this would be the time. And then now we're actually getting a little bit of a cancellation here, or a little bit of a red dot on the momentum wave. So we need to get moving here. So that's why I'd say today's so important, and this week is extremely important for Bitcoin. So we have our higher lows that we want to keep in, and these would be our higher highs. So in the next months, we would have to get back up and make a higher high to really keep this moving. And one thing I've noticed for Bitcoin, and this really brings out the fear if this does happen, it freaks many people out, even if you've been in the space for a long time. We'll have our bottom, that capitulation wick, and then we'll just grind down. It can take 10 days or 11 days where we just work down in this area. Everybody freaks out. We think we're about to lose 40,000. Then we push up, higher low, and then we just bang it out, and it's off to the races. But I don't want to do that because, like we talked about, guys, this 200 moving average is significant. If we step back and we look at this first run that we've had, excuse that line there, get that off. So if we look at this first run that we had up to 65,000, we were trading up above this 200 moving average the entire time until we had that 50% dump where we went down. But even this 50 moving average, for the most part, we were finding support off it this entire time, and now it's acting as overhead resistance. That's going to be another thing that we have to get over top of. So, you know, guys, it's still too early. I want to see where candles close, but I've always kind of drawn the line in the sand. If we're still up above the 200 moving average and we're finding support off it, then you're still in that bull market. But once you start dropping below that and you see that it's overhead resistance and you can't break up through that, many times that will start marking the bear market. Doesn't always have to. You can see back in this correction we dropped below it, and the reason for that is it's moving sideways right now, so it's not as significant as when it's curling down or when it's curling up, when you're finding support or resistance. So it's more so just moving sideways. So if we did drop down below, we'd still have a chance to get back up above it as it's moving sideways, but it still is not a good sign if we can't hold that as support. So I would love to hear your guys' opinion down low. I'll try the best I can to get back to the comments. Been crazy, guys, with my businesses and health and everything else I got going on right now, so just bear with me. I'll try to get back to the comments as soon as possible. It's just me. I just do this on the side for fun. So I'm just a personal trainer, guys, a specialist in fitness and nutrition who loves to do charting and all this other stuff. So let me know down low. I love you all. Take care.